So hello and welcome to the latest episode of the SMEsouk Podcast, brought to you by Rakbank Business. My name is Richard Dean, I'm the host of this series of the SMEsouk Podcast, and today we are talking tax. Yep, gotta do it, it's a reality. Corporate tax is here in the UAE and elsewhere. So many questions that people are getting in. People are quite concerned about this. So we've got an expert from one of the big four firms to answer some of those questions and maybe allay some of those fears. Delighted to welcome Nadia to the podcast today. Nadia Batiukova, Corporate Tax Lead, KPMG Lower Gulf. Thanks for being with us, Nadia.
Thank you for inviting me.
Corporate tax is real, it's live. What's your message to small and medium business owners and managers in the UAE?
Exactly, Richard. Corporate tax is already implemented in the UAE. That I think that is great news, even challenging for the organizations. My message is the companies need to assess how corporate tax will impact their financials, what new compliance and administrative tasks and burdens they will need to comply with. If the financials of the company are ready, if the accounting standards are in line with those that are allowed by the corporate tax. So all this implementation and readiness for corporate tax compliance obligations are needed to be assessed.
And for those who are thinking, oh, I don't have to file until September 2025, what's your message to them?
Well, there are already deadlines for the city registration, for example. All the companies, even if they are exempt or will not pay corporate tax liability, will need to register for corporate tax. Actually, they will need to review their trade licenses. There is a decision published by FTA where these deadlines for city registration are very clearly established. So the companies will need to register for city, and also they will need to assess when the city return will need to be filed and how corporate tax liability will be determined.
So the message is that CT, corporate tax, this is not something of the future. This is here, this is now, right?
It is reality. It is reality and will stay for a long time here.
So what questions are you getting as a tax lead, as a firm like KPMG? I know the questions we're getting as journalists, and I'll share some of those with you, but what's the question that you get asked more and more?
Many questions. First of all is awareness about regarding corporate tax. No, for multinational companies, it's easy. They have in-house big tax departments. Small and medium businesses in the UAE don't have any reference for corporate tax in the UAE. So navigating the complexity of tax legislation is difficult for them. So they ask us what corporate tax regime are available for the companies, how corporate tax income need to be calculated, how tax liability will be determined. All these questions. Also, what changes they will need to implement, how it will impact on their financial discipline, operational efficiencies. So all these questions that we are discussing now with our clients. And for tax professions, for example, straightforward questions like how account tax. No, it is a big challenge for the SMEs, especially. So we are working on this with our clients, help them to prepare their different tax workings. So all these assessments and discussions that we have with our clients.
So in terms of the tax preparedness, I guess the good news is, if we can call it that, is that we did have VAT a few years ago, and that made a lot of small businesses here in the UAE, they had to get formal accounts. Before that, it could be bits of paper, it could be maybe an Excel spreadsheet. But once VAT came in, you had to have a relatively proper set of accounts. So with that experience in mind, are most UAE companies at least kind of ready for corporate tax?
It is true. Some experience the companies can take note from VAT implementation period. However, VAT is not based on the accounting, so even they prepare somehow their financials now, they have to see if their standards, accounting standards are in line with those that are allowed by corporate tax. So many companies we see that they use accounting standards different from IFRS, so they will need to reassess to change to these standards. So some readiness is there, some experience they can take. However, the tax is new, is complicated, is different one. The principles of the tax are different, so they will need to do really this exhaustive analysis and assess what changes they will need to do. And obviously, for example, even for the registration, they registered for VAT, there were so many mistakes, so many, even for federal tax authorities, the implementation of VAT was new matter, and there are many few developments from tax authorities. Now the system is more sophisticated, is more ready, so the city registration is a bit different one. However, the companies can take this experience from VAT registration to introduce and to use this system and these processes for city registration.
Well, let's talk about fines, if we may, because if there's one thing that we get asked about as journalists, it's fines. Small business owners are worried that they're not doing it right and they might get fined. Who is eligible for fines? What do people have to watch out about? And what steps do they have to take, Nadia, to make sure that they don't get those fines? None of us like fines. We don't like parking fines, and we certainly don't want tax fines.
There are many fines that are included in and can be imposed, because the companies don't comply with their corporate tax obligations. The first and the immediate fines that can come is related to the city registrations, that companies that are not registered on time within the deadline established by the federal tax authorities may incur in fine of 10,000 dirhams for late registration or missing this registration. Also, there are penalties or fines for not submitting city return or for not determining the corporate tax liability on accurate basis.
Now, a number of companies will not have to pay any corporate tax. There are various thresholds, and if you're not making a certain amount of profit, you don't have to pay the 9% corporate tax, but you do still have to register, don't you? You don't get out of finding your accounts. Explain that difference to me, the fact that you don't have to pay tax, but you do have to file your accounts.
Absolutely. It is very common mistake of the clients, and of SMEs. So there are different corporate tax reliefs allowed in corporate tax law, where in practice the companies will not pay a corporate tax liability. However, the obligation to register for corporate tax and to file the city return is mandatory. So even if the company is taxed at 0% because it's eligible for qualifying free zone regime, for example.
Or free zones is interesting, yeah. We'll talk more about that, but carry on, finish your thought.
Or, for example, the companies that are eligible for small business relief, the companies which revenue doesn't exceed 3 million dirhams.
That's revenue, 3 million dirhams.
It's revenue, exactly.
Yeah.
It's not tax income. So they will be not liable for corporate tax in the year in which they don't exceed this threshold. However, this is why they need to register. The Federal Tax Authority need to have this tracker. What is the revenue of the company? Once the company exceeds this threshold, they will need to pay the tax and obviously file the city return. So the obligation to register and the obligation to file city return is mandatory.
Well, let's talk about these free zone companies. Again, a question we get so much. I'm in a free zone. When I signed up, I thought I had tax exemption. Do I have to pay tax? The short answer is you do have to register. But there are tens, if not hundreds of thousands of these free zone companies in Dubai, where we are today, in Ras Al Khaimah, in every emirate. What is the status?
Well, in relation to free zone companies, I think that the wrong opinion or that we see is considered that any business establishing free zone is exempt from taxation, is free tax. It is not true.
It is not true.
It is not true.
Okay.
So only companies that are establishing free zone and obtain only qualifying income or undertake qualifying activity will be eligible to be taxed at 0%. It's not an exemption from the taxation, it's 0% taxation. And there are many additional conditions that the companies need to meet in order to be eligible for this regime. So not all free zone companies will be exempt from the taxation. They need to do this exhaustive assessment if they meet all these conditions, and in case they are eligible for this regime, even thus they need to register for city and file their city return.
Okay, so a couple of questions that we've had a few times, and this is mainly from people who own and run their own small business, which is very common here in the UAE. I'm sure it is everywhere, but certainly here in the UAE. And the questions, they go like this. The first one is, okay, I own my own business, I'm 100% shareholder. Can I just increase my salary this year so that we don't make profit, so that I'm not taxed on profit and I just take it all as salary? Give myself a pay rise to a few million dirhams. As I understand it, you can't do that. But what's the situation? What would be your answer to business owners with that question?
It is a very good question. Actually, we see now this planning in order to reduce tax liability of the companies, they start granting huge payments to the shareholders, to the related parties in order to reduce their tax liability. It is absolutely wrong because now all the transactions with the related parties, with shareholders, with other subsidiaries of the same owner, now all the remunerations, all the transactions will need to meet with arm's length principles, so-called transfer pricing. So they need to be comparable with the payments, for example, salaries or bonuses that are paid on the market to the independent employees, for example. So in all the amounts that will exceed these comparable amounts, pays will be not deductible for corporate tax perspective. And even that, so will be not deductible, tax liability will be not reduced, and even more the companies can be potentially be subject to the penalties, because the speech mark is not properly assigned.
So if I own a steel processing plant in Ras Al Khaimah that made 10 million dirhams profit last year, I can't just give myself a 10 million dirham salary and get out of tax.
Absolutely.
The authorities are going to spot that.
Absolutely. It's no longer work.
Okay, sorry, go on.
No, and actually just wanted to mention that one of the challenges that we see now for SMEs till now, companies and owners, it's my own business, the owners used to use the company to do the personal transactions within the company accounts, donations, acquisition of the investment, real estate, financial instruments. So it is the personal accounts. Now they need to clearly put a line between the personal transactions and commercial transactions, the business of the company, and all the personal expenses or investment shouldn't be allocated not to the company and will not be taken into consideration for the termination of the corporate tax liability of the company.
Okay, so a company car would be okay if it's genuinely a company car, but a fleet of 10 company cars, probably not going to, would be my interpretation.
Absolutely, you are correct.
The last one we get, and this is business owners looking to pay as little tax as possible, which is business owners the world over, so I get it. They say, okay, I've got a company that has 10 million dirhams a year of revenue. What if I just split it into 4 companies with 2.5 million dirhams of revenue each, and then I'm below the 3 million dirham threshold, and then I pay 0 tax? I'm guessing you're going to say that's not okay as well. What would be your opinion?
Yeah, it is not okay, obviously. And the city law, as you can imagine, it is the best international tax standards represent. So there are special general anti-abuse rules that are applicable once the corporate tax law was published from December 2023. So all this restructuring, now split of businesses into different companies, will be looked and reviewed under these general anti-abuse rules. So Federal Tax Authority are authorized to delete of this restructuring and not to take into consideration this restructuring and consider the business as whole.
Okay, fine. Thank you for clarifying that. That's good to know. We've talked quite a bit about companies who are worried about the fines. Maybe they're not prepared yet. Let's talk a little bit about companies that are prepared. They've got an accountant or they've got an external firm of auditors, maybe not a big four firm, but they've got an accountancy firm. What tips can you share with them about best practice, about managing this even better? You've come from Spain, for example. You spent the past decade working there and moved to the UAE a year ago. What advice can you pass on to owners of small businesses here in the UAE about best practice in managing tax? You're already good, but you want to be the best.
Absolutely, there is a room for improvement. So if the company already know what corporate tax regime will be applicable for them, what we advise is to establish the tax procedures, how, as you say, that how to manage the tax, how to ensure that this corporate tax compliance, that they are meeting the corporate tax obligations. So we advise, for example, the companies to elaborate a comprehensive corporate tax manual or establish tax policies where all these details about the deadlines, timelines, who is responsible for what, are clearly identified. So this is what we advise also to review, because the companies, one considers that, okay, I will be taxed at 9%. There are many tax reliefs available in the corporate tax law. For example, companies that are making tax losses, they will need to know that these taxes will be not lost in the future and that they can use them to reduce their tax liability in the future.
So there's, in my simple terms, I would say then there are legitimate ways to make sure that you don't pay too much tax. Everyone's got to pay what they've got to pay, but it's perfectly legitimate to look at ways of not paying too much. Is that fair to say?
Absolutely. It is just to pay what corresponds to pay, and obviously this reliefs is not only in the UAE, in many jurisdictions, I would say in vast majority of the jurisdictions, different reliefs are implemented in order to stimulate, to motivate the development of business, to grow, to attract the investment. So it is not to not pay or to pay too much. It's just pay fair and use all these legal provisions allowed in the corporate tax law to optimize your tax liability. Why not?
Yeah, because you don't want to get 3-5 years down the line and think, no, I could have got exemption for this investment in machinery or whatever it may be. You want to know that now, don't you?
Absolutely.
But that does mean speaking to an advisor, I guess, doesn't it? Inevitably, whether it's you have an accountant in-house, for all but micro businesses, my sense is that you really do need an expert either in-house or from a third-party advisory firm. Is that really the way to go? Or can companies do this themselves on their own? Can business owners figure this out on their own themselves?
Well, multinational companies or big companies they have this capacity to have their in-house tax department. So obviously it's better to have experts in-house, obviously to be supported by professional advisors. I think for SMEs to have in-house expertise is difficult. They are limited with the resources, human resources. So I think that what they need to do, or I advise to do, is to finance people, as the management people, to read the city legislation, to understand it, but anyway to seek professional advice, because to have in-house people, maybe it will imply more cost than to seek external professional advice.
Well,
advisor.
in terms of information, you raise an interesting point there, that there's a lot of information out there. There's also quite a bit of misinformation. Again, this is a global phenomenon, social media, there's a lot of misinformation out there. What kind of resources would you recommend to small business owners and managers? I mean, I know, for example, just looking at your LinkedIn profile or the KPMG LinkedIn profile, there are various resources. You're quite active in posting about this. I was reading the KPMG UAE tax flash. That's very helpful. So firms like yours are publishing information. Obviously, the Federal Tax Authority as well publishes information. What would be your, if you like, go-to resources that you would recommend to a small business?
So all consulting companies, or many consulting companies now are publishing tax flash, KPMG including. So from KPMG, we are very conscious and cautioned. We are publishing only objective information or information that is published by Ministry of Finance or Federal Tax Authority, because any advice or any opinion need to be done on case by case. So what I advise is not to. There are many opinions now circulating in different web pages and LinkedIn. So I advise to read objective information. I advise to rely to the Federal Tax Authority guides that they are publishing, to the law, to the Ministry of Cabinet decisions. Obviously, to seek professional advice, but adjusted or undertaken for their specific case. Not rely on these opinions that are circulating in media.
In media, again, my bad. I'll take some of the responsibility for that. We'll do our best. But in terms of mistakes, just before we wrap up, people are going to make mistakes. Of course they are. What are some of the common mistakes that you've seen, either here or maybe in your previous career, the past decade in Madrid, in Spain, a mature tax environment? What are some of the common mistakes and pitfalls that you can point out? So hopefully, people could avoid making them in the first place.
Yeah, obviously there are common mistakes and specific mistakes, no, that we see with the clients. The most common mistake, I would say, in the UAE with the implementation of corporate tax is underestimate the complexity of the tax regulation. There are 1,000 plus pages legislation, so please be careful and don't consider that is straightforward norm. So again, seek a professional advice, read, dedicate time to reading the legislation. Another common mistake we already commented is that the companies that will not pay tax consider that they don't need to register for CT and don't need to file CT return. So it is a mistake, so they will need to do it. Another common mistake for SMEs is that they consider that they still have time. The first CT filing will be for vast majority of these SMEs will be in September 2025. So they consider that we have time not to assess to in some months before the deadline we will assess. However, the tax will tax the revenue, the taxable income of 2024. So this is the time to do all these assessments, to do all the needed changes in the financials, to accurate assess what need to be done in order to be prepared for the corporate tax filing.
And to make sure the money is set aside.
Absolutely, because whilst the CT rate in the UAE is one of the lowest in the world, depending upon the type of expenses of the company and businesses, it can result in significant outflow. So the companies will need to ensure that they create the significant funds to pay tax liability on time for the first fiscal year and onwards.
Well, Nadia, thanks so much for your time today. We're going to let you go because I know how busy people like you and your colleagues in the industry are at the moment. Nadia Batiukova, Corporate Tax Lead, KPMG for the Lower Gulf. Thank you very much indeed.
Thank you very much for your time and for inviting us.
That is it for this edition of the SMEsouk Podcast, brought to you by Rakbank Business. Do please join us for the next one.